Welcome back. So the equity markets are having a good morning. Still 230 points up on the Nifty. And that's actually thanks to the commodity markets because that collapse in oil prices, that has made the equity bulls quite happy today. So let's go back to Manisha. Manisha, what's the latest?
You know what, Surbi, yesterday, same time, we were talking about on how the crude prices surged 5%. We're talking about almost an 11% of a decline if you count yesterday and the kind of declines that we are looking at today as well. So overnight, we've seen 8% of a cut coming in. Asia's open 4% on the lower side. We seem to be gaining a bit of that ground there. But in the last 1 month, now we're just about 9% on the higher side. And for 2025, overnight, we've turned negative for this year. We were trading up by nearly 8% yesterday when I was talking to you, and we're down by 7%. So all of that clearly has changed very, very quickly. Clearly, as we've been talking about, we are trading now at around 2-week lows when it comes for the crude oil prices. It's back at the levels before that Iran-Israel war began. Clearly, Trump announcing ceasefire agreement and the kind of statements after that we've seen from Iran and Israel coming in also seem to have taken off that premium that crude prices was holding for some time now. And then Iran's retaliatory strike that we saw in Qatar also not leading to any casualties and not too much of damage as well is what gave us sigh of relief. The oil prices also clearly have avoided that worst case scenario of Strait of Hormuz closure as well. And that was a premium that was building in for prices. Trump's statement telling everybody to keep an eye on crude oil prices, ensuring that it does not keep up. Everyone keep oil prices down. I'm watching is the statement or is the tweet that Trump put out yesterday seems to be working at this point in time. I also want to put out on what brokerages have been saying in case there was a de-escalation. Remember, we heard all of those statements from Bank of America to Citi to Mizo saying that the prices can go to 95, 120 as well if there is a worst-case scenario of Strait of Hormuz closing. But now we're talking about all of these groups talking about, now that you're talking about de-escalation, you could be looking at the crude prices coming off as well. So Mizo says that de-escalation can bring the prices down to 65. There are similar statements coming in from Bank of America, while they talk about 75 as an average for this year, which is where we already are. But they also talk about a range of anywhere between $60 to $80 until 2030 as well. Cities talked about 55 if we do not see Iran, if we do not see this escalation, and if there actually is an agreement between US and Iran, then the prices can come off quite sharply. 55, 50 are the kind of levels Cities spoken about, Bank of America has said, and Goldman Sachs talked about that as well. But moving forward from here, there's just so much to watch out for. To begin with, the Fed's rate cut plan for the month of July. We've seen a lot of statements come in from the Fed officials to this. And then you also have the 9th of July tariff deadline. It is going to be about the big, beautiful US tax bill passage as well. And then the street will absolutely watch out for the Jerome Powell's testimony for Congress today. Further cues would be coming in from this one.
Okay, all right. Thanks a lot for that quick update, Manisha.